Home prices in the Halifax Dartmouth area are about to go to the moon, and the question you need to ask yourself is, are you going to be on board or are you going to be watching from the ground? Welcome back to my channel. My name is Greg Pierce. I'm a local real estate agent and investor here in the Halifax Dartmouth area. And today we're going to be covering some market stats from year to date until end of August, as well as looking at two massive announcements from the Government of Canada that's really going to boost the lower end housing market as they're trying to prop up the housing market right now. And that is not a great sign for the economy, but it could be good news for people that already own real estate, and even better news for people that time the market and get into the market now. All right, before we dive in, if you are new here, please like this video, subscribe to my channel, and hit that notification icon so you can be informed anytime I release new content. I cover all things real estate on this channel, so please make sure to do that. I'd really appreciate it. And if you have any specific needs or looking to get more information about the Halifax Dartmouth market, please click on the Calendly link below in the description. I'd be happy to set up a call with you to discuss any of your questions about the real estate market here in this area. So in this video today, we're going to be discussing the year-to-date stats for the Halifax Dartmouth region. So we're going to be looking at what's happening in the now, but more importantly, we're going to be assessing and analyzing what's going to be happening in the future. And there's going to be a massive influence from two huge government announcements that were just dropped. So stay tuned until the end. I'm going to be covering all of that and predicting what's going to be happening here in the Halifax Dartmouth market. All right, before we dive into the stats, it's important to note that we're going to be looking from January 1st till the end of August 2023 and comparing that to the same time period here in 2024. The big thing to note is that there seems to be a general consensus that the market is down, higher interest rates, things like that. But in all reality, sales are actually up 6.1% in this region. So we've seen 3,596 homes sold so far compared to 3,389 in 2023. And that is a solid 6.1% increase. Despite a lot of talk about rising interest rates, buyers are still active and hungry for homes in our region. Now, I expect that number to continue to rise through till the end of the year because there have been 3 interest rate drops in the last 3 announcements from the Bank of Canada, and there's no signs of slowing down. There's another announcement in October and another in December, and both of those are widely anticipated to be more rate drops. Now, let's talk about prices. These are more moderate increases. We are up 2.8% here in the Halifax Dartmouth area to a price of $577,824, and that's up from $562,064 last year. So homes aren't cheap, but they're still gaining value steadily, and this is something where we're seeing more of that set appreciation, typically around that 3 to 5% per year, which is a stark contrast from the 20% plus year over year that we saw during the COVID region. Now, another important point here in 2024 is that it does feel like it's more of a balanced market, and we'll get to months of inventory in a second, but the days on market has shot up by 6 days, which may not seem like a lot, but that's essentially meaning that homes are sitting on the market a little bit longer, and I believe that this is a testament to buyers being a little bit more picky when they're looking at homes, and there's a little less competition than there was in years prior, which is leading to buyers seeing more houses, taking a little bit longer to decide, and that's a big result of why we're seeing homes sit on the market. 33 days is still very, very low in the grand scheme of things, and obviously that is skewed much lower when we get into price points sub $500,000. So months of inventory right now in the Halifax Dartmouth region is sitting at 2.3 months of inventory. To explain that further, that essentially means that if no more listings were to come on market, that is how long it would take for all of the existing listings on the market to sell. So it would take 2.3 months for those to sell off. So to put this in context, 4 to 6 months of inventory typically means a neutral or a balanced market. So with 2.3 months, this is a very strong seller's market. So if you are thinking of selling, now is a great time. Buyers are going to be coming out of the woodworks with the lower interest rates and these two massive incentives that were just announced from the Government of Canada, which I'm going to be covering next. So to give you some broader context comparing to Canada, Nova Scotia and the Halifax Dartmouth region specifically have been one of the stronger performers so far in 2024. The top performer has been the province of New Brunswick, but Nova Scotia has done a great job and has seen increases while there are a lot of provinces, and particularly some of the larger cities like Toronto and Vancouver, that have really struggled so far in 2024. So we're at a spot right now where prices are up, volume is up, and months of inventory is still relatively low. So this is forecasting already that there's still going to be a strong market here in the Nova Scotia region, specifically focusing in Halifax Dartmouth. And while inventory remains low, supply and demand is still an issue, interest rates are continuing to drop, and these two massive government announcements are only going to inflate the market. And I do believe that Halifax Dartmouth region is positioned to be a juggernaut in the future years in terms of home prices and getting a great return on your investment if you're thinking of getting into the market or you already own a property or two here. Now, before we get into the big government announcements, let me know in the comments below what you think is going to happen in the market, specifically Halifax Dartmouth, but if you live in other parts of Canada or in the US, let me know what your prediction is for the market and where it's headed over the next 5 years. So if you didn't hear the news, the government of Canada made two massive announcements that are going to vastly impact the housing market here in Canada. And my guess is that this is an attempt to boost and prop up the housing market, which is a huge portion of our GDP here in Canada. And this isn't a great sign for the economy. However, this could benefit buyers, but there are some caveats that I will also cover. So the Bank of Canada already announced earlier this year that they were extending amortization periods from 25 to 30 years on new construction for first-time home buyers. They've now broadened that to consider 30-year amortizations for all first-time home buyers, regardless of property type. And they're also extending 30-year amortizations on new construction to any buyer. You do not need to be a first-time home buyer. So if you're buying new construction and it's your 7th property, you still have the option to use 30-year amortization. Now, why are they doing this? Number one, first-time home buyers are struggling to get into the market, and this will lower their monthly mortgage payments, which means their purchasing power or affordability will go up. The caveat to that is you're going to be paying 26% more interest on a 30-year amortization compared to a 25-year amortization. So while this may get you into the market, it's also going to cost you more in the long run. So be cautious when you're looking at these options. And if you have the ability to do a 25-year amortization and maybe buy a property that's just a little bit cheaper than you could get on a 30-year amortization, that is still a better option in the long run. Now, it's no surprise that the government of Canada wants to prop up the new construction market. They want to see a lot of supply turned over, and they've made it very evident that they do not want to get hands-on in terms of building new construction. They want to leave that to private sectors. The goal of this is to turn over inventory so that supply can continue and also fill a lot of those empty voids right now with stopped projects like we're seeing in Toronto and a lot of these larger developments that aren't seeing the buyers able to scoop these up because of the high cost of entry. So in conclusion, I do think this is going to help a certain segment of first-time home buyers get into market that they otherwise wouldn't be able to with a 25-year amortization. I also think that this is really an inflationary action, and I don't think it's a great long-term solution. Ultimately, the people that are going to be benefiting from this is the banks that are going to be getting those extra interest payments. I don't know how I feel. I do think it will help in the grand scheme of things, but ultimately, I think this is a miss from the government of Canada. And it looks like it's kind of an immediate reaction to something that needs a little bit more focus on how to help first-time home buyers and maybe looking at things like waiving deed transfer tax for first-time home buyers altogether or other solutions that isn't going to put them further in debt down the road. Now, the second major announcement isn't going to have as much of an impact in the Halifax Dartmouth region as it will in provinces like Ontario and BC, but this announcement is that they're increasing the insured mortgage cap from 1 million to 1.5 million. So to explain this further, an insured mortgage is anything that's less than a 20% down payment. You need to get insurance, and it's for the bank so that if you default on your mortgage, the bank is covered by that insurance that you pay for. This previously limited people to putting 20% down on anything that's above that $1 million marker. And if you're living in a city like Vancouver or Toronto, that's a very common price point. So raising that cap now allows people to put down as little as 5% on a property up to $1.5 million. This is going to allow a lot of first-time home buyers the ability to get in with less down payment and get into these higher price points. That's not going to be as much of a factor here in the Halifax Dartmouth region. We only have 170 listings right now at this time of recording that are above $1 million. So a little bit less of an impact here, more of an impact across the country, and obviously specifically in those two larger markets. Again, however, this is going to boost the lower end segment of the housing market, the same with the 30-year amortization, and it's also going to put people in more debt. If there's an option to buy a very nice $1.3, $1.4, $1.5 million home for as little as 5% down. This is going to allow people to get into this market, but only own 5% of the property while the bank owns 95%. That is going to mean more interest payments and ultimately more debt taken on by the buyer long term. So this is an inflationary action as well. And again, not the direction we want to be moving in. I do think it does help some of the segment, particularly in those two markets, but I also think it could have some negative consequences, which are going to hurt people down the road. I do find that here in Canada, people focus a lot more on the monthly mortgage payment than the price of the home, and they don't always consider their future selves and what that means for their picture when it looks like retirement, or when they go to refinance their property, or when they go to sell and have paid little to no equity down because they got in at such a low marker. This is such an issue that we see here. We're very quick to take on debt and just want to get assets and look like we live a very luxurious lifestyle without considering the consequences. So we've covered year-to-date stats. We've covered the two massive announcements from the Government of Canada. Now let's look at what's going to happen here in the Halifax Dartmouth market over the next 5 years. Right out of the gates, I will say we are not going to see the craziness that we saw during the COVID era. We're not going to be seeing 20% appreciation year over year again. I hope not. That's not a good thing, despite what some people may tell you. But what I do think is going to happen is a very strong appreciation of, I would say, roughly around 8% over the next 5 years on average. And here is why. There are four massive catalysts that move the housing market that are in play right now. Number one, we still have a huge supply and demand issue, not only in Canada, but specifically in Nova Scotia and the Halifax Dartmouth region. Anytime we don't have enough supply and there's massive amounts of demand, that will always drive home prices up. Number two, we're still seeing massive population growth. Yes, the Trudeau government has suggested that they will be easing up on immigration, but our country and our province is still growing very, very rapidly, as that's the only way to grow our GDP in Canada right now. So they're not going to be hitting the brakes too hard when they're looking at that. And that's only going to impact the demand side while still struggling with the supply side that I mentioned in point number one. Point number three is that we are continually seeing interest rates coming down. That always gives people more purchasing power. And as mentioned previously, Canadians in general love to take on debt without much consideration for their future. So lower interest rates mean higher purchasing power, which means some people are going to be able to get into the housing market, whereas otherwise they weren't able to. And then other people that were already able to buy in the $500,000 price point are now going to be pushed up to that $600,000 and $700,000 price point. And last but not least, the two government announcements are going to boost the lower end of the market. When you're looking at purchasing power, one is by extending the amortization, which lowers your monthly mortgage payments, which has the same effect as lowering interest rates. And the other is boosting up the insured mortgage cap to 1.5 million. That's going to have huge impacts on those two major cities. And even here in Halifax, we will feel that to some degree, particularly when we're looking at those $1 to $1.5 million listings. In conclusion, I do expect that this market is going to take off in a big way. There are all signs pointing to future growth here in this region. We still have a lot of untapped potential. And in general, Nova Scotia and the Halifax area still doesn't get the exposure that the major markets do. But people are slowly starting to realize what a great place it is to live. Yes, we're lacking in infrastructure right now, but that will be coming along in the near future. And I do think that the province is in a position to be a have province, where in the past we've always been a have-not province. The capital of the province, Halifax, is going to benefit drastically, and there are massive population goals here in the province of getting us up to 2 million and 1 million in Halifax respectively. So I do expect the housing market to take off in a big way. So if you're looking to buy, now is a great time to get in. If you already hold property, you're in for some great appreciation, in my opinion. So stay tuned for more content like this. I'd love to hear your thoughts in the comments below. And as always, thanks for tuning in, and I'll see you on the next one.